Okay, let's turn to the statement of cash flows. Cash flow, we simply mean the difference between the numbers of dollars coming in to the company and the number that is going out of the company.
Cash flow from operating activities is a section of the statement of cash flows that is included in a company's financial statements after the balance sheet and income statements. Cash flow from operating activities appears in the first section of the statement of cash flows. There are a number of different ways to calculate cash flow from operating activities, but the American Institute of Certified Public Accountants recommends starting with net income as stated on the income statement. Net income is then adjusted for working capital changes and non-cash accruals that have been made throughout the reporting period. These adjustments include depreciation, amortization, increases and decreases in receivables, increases and decreases in payables, changes in inventory levels, and any expense or revenue accruals. Cash is the lifeblood of any business. Therefore, it is very important for managers to know how much cash has been generated from operating activities. Knowing how much cash to expect from ongoing operating activities helps them plan their cash flow budgeting for things like future capital investments, hiring, and operating expenses. Investors also like to know how much cash a company generates from its ongoing activities. Steady cash growth is indicative of an efficient, profitable, well-managed company, and thus a good investment.
Okay, operating activities are normal core activities within a business that generate cash inflows and outflows. Now let's turn back to Home Depot here. Of course, we're looking December 31st, 2014. There are three sections within, this being the first one here. When we look at cash flow from operations, this would be definitely something an investor or another company that wants to invest in this company, or like a supplier or a bank would want to look at. Now, net income here, we're going to take that course from the income statement. Turn back to the income statement. You see we have 6,345. Of course, that's in millions. We're going to add back in depreciation here since it's a non-cash outflow. Okay, then we have increases and decreases here. Of course, accounts receivables. And an increase in accounts receivable means sales were made, but cash was not collected. So that's why we're taking a negative 86. Inventories here. Reductions in inventory. Every dollar spent in inventory reduction leads to a reduction in working capital. So we have a negative 22. Decreases in other current assets. Negative 121. Increases accounts receivable at 94. An increase in other current liabilities, 134. Total decrease, negative 4. So a total here of 8,127. And of course, that's in millions. And like I said, this is probably one of the first things I'm going to look at. I'm going to want to make sure that they are actually making money from their operations. Okay, let's turn to part 2 of the cash flow statement here, the cash flow that Home Depot has invested in plant and equipment. Let's see, the financing activities in the cash flow statement focuses on how a firm raises cash and pays it back to investors through the capital markets. These activities also include paying cash dividends, adding or changing loans, or issuing and selling more stock. This section of the statement of cash flow measures the flow of cash between a firm and its owners and creditors. A positive number is going to indicate that the cash has come into the company, which boosts its asset levels. A negative figure indicates when a company has paid out capital, such as paying off long-term debt or making dividend payments to shareholders. Now, going through here, just like the first one here, we have additions and subtraction from it. But let's look at the net here increase. We have a negative 206. Of course, that's in millions. Okay, so we had, again, like I said, negative 206 for the financing activity side, and for investments, we have a negative 1,258. Of course, that's in millions also. Okay, let's put it all together here for the statements of cash flow. Like I said, from operations, we had a positive You would like to see an increased number over the years when we look at time as the benchmark here. From investments, having a negative number may be negative, but also positive in the sense that you're buying new equipment, buildings, things like that to you got to put money back into the company. You have a negative 7,075 of providing new financing. So we have a negative 206. Like I said, I'm not going to be too company that is growing, they're going to need to put money back into the company. They're going to also have to borrow money in the sense of bonds or issue new stocks. Of course, you don't want to see a negative number for a long-term period here, but as long as I've seen an increasing level in operations, which I do here with Home Depot, I'm going to say that's positive. Of course, when you do your ratio analysis, you're going to look at many factors. And, one of the factors that you're going to look at is the cash flow of the company. And then you're going to look at the ratios and decide if whether the company you pick for your project here would be a good buy to purchase their securities, or if you're a creditor, would you loan them money?